So good afternoon, everyone. Welcome to the Washington State Microenterprise Association Trainer Technical Assistance Series. And I wanted to take a moment, first of all, to say thank you to our panelists. We have Desiree Albrecht from the SBA, Michael Reis from Business Impact Northwest, and Janie Sacco from the SBA. And we're really, really excited that you're all here today. One of the many questions that our partners have been hearing since the Restaurant Revitalization Fund has been announced and then was released is, how do we help the very smallest businesses access these funds? Many of them don't even know that the option is available. Some of them don't have their records together. Like, what has been the best strategies to help these very small entrepreneurs, small businesses access these funds? And so our hope today is to present this material to help our microenterprise development partners around the state, both rural and urban, learn more about what actually is involved in accessing these funds, who is eligible, how to apply, and more importantly, how to overcome any barriers that these businesses may have in accessing these funds. So without further ado, I'd like to begin by just having each of you introduce yourselves and who you're with and what your role is in getting the information about the Restaurant Revitalization Fund out to the public. I'd like to begin with you, Michael, and then Desiree.
Yeah, thank you, Lisa. My name is Mike Reis. I work with Business Impact Northwest. I am an advocate for businesses on the east side, and I help all types of businesses, but heavily in the restaurant space. With the RRF in particular, I actually physically get on Zoom calls with clients to help them navigate the portal, things like that. So that's what I do for everybody.
Thank you, Michael.
I'm Desiree Albrecht, and I'm an economic development specialist with the SBA in our Seattle district office. So we cover almost all of Washington and northern Idaho from our office in Seattle. And my main job is really to be a connector, if you will, for small businesses and entrepreneurs who are looking for resources for their business. So my job is really to make sure that they get connected to the right resource for the right stage of business that they're in, whether it's an SBA resource or whether it's one of our networked resource partners or other things that are out there. So thanks for having us today.
Thank you. Perfect, yeah. Desiree, thank you. And Janie.
Well, good afternoon, everybody. My position at the Small Business Administration is that of being an outreach and marketing specialist. So I work specifically with the small business community throughout our region and beyond on an as-needed basis. And I also work with financial institutions that help provide funding to you. And we're really out there trying to do financial education at many levels based on all of the SBA products we have right now for the federal relief, and also continue on as we get through this phase into providing access to capital and making sure that you know what programs are available to you as a small business owner. Thank you.
Excellent. Thank you so much. And for those of you who may be already in our network or may be new to our network, the Washington State Microenterprise Association really is a community of microenterprise development organizations, community development financial institutions, nonprofit organizations all over the state. And in the chat, our Cherie Reeves-Spare, our staff, put some links where you can learn more about the partners in our network. WSMA does a lot of different kinds of activities. One is to build networks, one is training and resource coordination, and another is grants, providing small grants for capacity building in nonprofits that serve those very small, under 5 employee companies around Washington State. And just for a heads up, if you go to our website, you can learn about the grants that were just funded in January, and then we just got finished with a grant round actually last night, where we are providing funds by the Department of Commerce to help these organizations serve the very smallest under 5 employee companies with training, technical assistance, and microloans. Okay, that was a lot. So without further ado, I'd like to have the SBA, both of you, go through your slide deck, and if you could begin by sharing some of the most recent information about applicants, funds released, those data that we can kind of get a sense of where we are in the process.
Sure, thanks, Lisa. So I'll start with just kind of giving you guys where we are to date as far as applications received and funded and such, and then we'll get into kind of the meat of the presentation, and Janie at the end will cover kind of some of the set asides and all of that have been created. But just know that as of yesterday, May 12th, overall, the RRF program had received 266,000 applications, representing over $65 billion in requests for funds. Nearly half of the overall submitted applications came from women, veterans, and socially and economically disadvantaged business owners. So during the first week of the program, SBA received applications, 76,183 of them were from women-owned businesses. 6,093 were from veteran-owned businesses, and 42,284 applications were from those business owners that were socially and economically disadvantaged individuals. So at this time, they have also dispersed, as of yesterday, SBA's dispersed $2.7 billion in funding to over 21,000 restaurants since May 3rd. And there continues to be some different set asides that specifically there was set aside set at about, I think it, remind me, Janie, if it was 5 billion.
I think it was over 9 billion.
Yeah, something like that. There's quite a bit set aside. We'll get to it later. Janie will cover it for sure. But there was set aside money for basically the smallest of the small businesses, those that had less than $50,000 in pre-pandemic revenues. And there's still money available in that set aside fund at this time. That hasn't been filled up. So we're definitely encouraging any businesses who meet that criteria of $50,000 or less in pre-pandemic revenue to get their applications in as quickly as possible before the portal closes. So that's kind of where we started off, or where we're at in terms of applications submitted and funded at this point. But it's moving quickly, that's for sure. So I'm going to go ahead and turn it over to Janie. I'm going to share my screen for her. So we've got the slides, and she's going to kind of take us through the first part, and then
Wonderful.
I'll jump in.
I have a quick question. So when is the going to be closing?
We don't know, Lisa.
Okay.
It's
All right.
dependent upon the volume of applications. So whenever SBA feels that they've reached, so the program itself is what, $28.6 billion. So obviously we've received $65 billion in requests. We've already received enough more requests than we're going to be able to fund. But since we do have that smaller set aside for the smallest of the small that hasn't been reached yet, SBA is leaving the application portal open. So when we reach that set aside amount for those under $50,000, then that's when SBA will close the portal at that time. But we don't know when that will be. So we're encouraging everyone to apply as soon as they can.
And so that's really the meaning for this work today. So is to really get the word out for the very smallest businesses, at least for that set aside. So thank you. All right, Janie, go forth.
All right, thank you.
You can see my screen, Janie.
I can, yes, thank you, Desiree. Well, thank you, Lisa, for having us here today to do this presentation. We're going to just crank through this information, and I am going to switch up my little, there we go. So I get a bigger screen. All right. So, we're from the U.S. Small Business Administration, and we're here to give you information on the Restaurant Revitalization Fund, eligibility, ineligibility, how to apply, documentation. So Desiree, let's go on and start the slideshow. First of all, we want to just let you know that the American Rescue Plan Act that was signed into law on March 11th, 2021, established the Restaurant Revitalization Fund. And as Desiree indicated, there was $28.6 billion appropriated for this fund, authorizing the SBA to do the award process. The appropriations will remain available until all the funds are expended. And we're going to go over this a little bit later too, but all of the funds must be used for eligible purposes by the awardees no later than March 11th, 2023. Next slide. Let's talk about who is eligible to apply. It's a very broad base of restaurant and or food and beverage providers. So for the first category, it is restaurants, food stands, food trucks, food carts, caterers, bars, saloons, lounges, taverns, snack and non-alcoholic beverage bars, such as coffee shops and ice cream shops. And then we have the next category of bakeries that, again, have to demonstrate on-site sales to the public of at least 33% of gross proceeds in 2019. In addition to bakeries that go into this category, it's also brew pubs, tasting rooms, tap rooms, breweries and or microbreweries, wineries and distilleries, and as well as inns. The other one that was added to this, but's not on this list, is bowling alleys. So again, bakeries, brew pubs, the tasting rooms, tap rooms, etc., on the bottom portion of this list are going to need to demonstrate that at least 33% of the 2019 gross receipts were for consumption by the public on site and in those sales. All right. So again, franchises may be eligible as part of this, depending upon whether or not they are on the SBA franchise directory. We'll talk about that in a little bit too, but I wanted to include them in the eligibility because they definitely are. The one thing that I do want to point out is that distilleries in the state of Washington do have a state statutory limit on their sales, and both sides of the House and the Senate, and Governor Inslee did send a letter to the SBA administrator indicating that, you know, they were advocating for the distillers that are in the state of Washington, whose again, statutorily are limited to 30% on-site consumption of food and beverage. So we recognize that that's out there for you, but anyway, they did at the state level send a letter up. Next slide, please. Now we need to talk a little bit about how much you're eligible for. Well, as we have been indicating, the larger dollars probably at this point have been fully expended, but in terms of the applications, but the SBA may provide funding up to $5 million per location with a not to exceed level of $10 million in total for applicants and their related affiliated businesses. The minimum award is $1,000. Next slide, please. We've done a lot of different programs, and this fund is an award. It is not repayable as far as the eligible use of the proceeds goes. But how is this one a little bit different than our other grant programs? And that is that applicants were not required to register in SAM. They were not required to obtain a DUNS number, and they were not required to provide a CAGE identifier that results from when you actually apply in sam.gov. We do want to let you know that valid unexpired individual tax identification numbers are acceptable as part of the application process. And that can be obtained through the Internal Revenue Service, irs.gov. So there are documents on the irs.gov website that is contain a frequently asked questions document related to ITINs. But the ITIN users are in the United States lawfully, and they have a specific tax identification number assigned to them. That looks like a social security number, but it starts with a 9. Next slide, please. We talked about who's eligible, but now let's talk about who's not eligible. If the business is operated by the state or a local government, it is not eligible. As of March 13th, 2020, as the focal date, if any owners own or operate more than 20 locations worth of businesses, they are not eligible. And it doesn't matter if they're operating under the same name or different names, or if they're in different industries. It's simply a function of if you are related by affiliation to a business network where you have more than 20 locations, you are not eligible. Also, if you have applied for or received a shuttered venue operator grant, you are not eligible to apply for a Restaurant Revitalization Fund award. If the business is publicly traded, it's not eligible. If your business is permanently closed, you're not eligible. Nonprofits are not eligible for this program. And if you, once you do your award calculation, have an award amount calculated below $1,000, you are not eligible for the program. Next slide, please. In terms of the organization type, you can see across the board, most organization types are eligible other than the nonprofits. So whether you're a C or S corporation, a partnership, a limited liability company of any version, you're a sole proprietor, you're a self-employed individual, or you're considered an independent contractor, tribal businesses, or limited liability companies that report on tax for tax purposes as an S corporation or a sole proprietorship are definitely all eligible to apply for this program. In the state of Washington, we do not have a B corporation. We have a different name for it, but it's basically a corporation that is organized for the benefit of social or environmental purposes. So all business types, with the exception of nonprofits, are eligible. Next slide, please. Regarding franchises, as I mentioned before, they are eligible. And again, you can go to the SBA.gov website and do a search for the SBA franchise directory. If your franchise is on that directory, you are eligible to apply. If your franchisor is not listed on that directory, there is a process for them to apply for SBA status. And all they need to do really is put together a package of all the documents that a franchisee needs to sign, as well as their franchise disclosure document, and email all of that into franchise@sba.gov. Our legal team will do a review of the documents and let the franchisor know if there are any documents that may need to be modified to comply with SBA requirements, and then give them the opportunity to do so. That does take a little bit of time. So we're hoping that most franchisors started on that a little bit ago to help you be eligible. Next slide, please. Regarding bankruptcy, if you have had a bankruptcy, then there are some allowances for you still to be eligible. So the big thing is that if you are operating under an approved plan of reorganization, if you have filed either a Chapter 11, 12, or 13 bankruptcy, you are eligible to apply. So the key is you have to have an approved plan of reorganization. An applicant, however, is not eligible if it has permanently closed, as I stated earlier, or if you have filed a Chapter 7 liquidation bankruptcy, or you have either filed a Chapter 7, 11, 12, or 13 bankruptcy, and you are not operating under an approved plan of reorganization. Again, permanently closed, just for clarification purposes, does not mean businesses who have temporarily closed their doors due to state or local restrictions or other pandemic caution, but they're still in operation and intend to reopen. Okay, just to clarify. Next slide, please. So what are the impact of the other SBA relief products or programs on the Restaurant Revitalization Fund? First and foremost, it is the one that it really is directly impacts this program is the Paycheck Protection Program. So there's a couple of things that I just want to point out here. One is that if you have a PPP application in process, but have not received funding, you are to withdraw that at the time you do an application for the Restaurant Revitalization Fund. And the reason for that is because when you're going through and you're filling out the application for the Restaurant Revitalization Fund, any and all PPP loans that are tied to the tax identification number as part of your business that you're applying for an RRF award under, they have to all match. And as you're going through the computerized version of the application and you put in the tax identification number for your business, all related PPP loans will automatically populate and be deducted as part of your calculation for your potential award. So if you have anything outstanding, please have your lender withdraw or cancel that application if it has not been funded already. All right. And again, the applicant must not have a pending application or received a shuttered venue operator grant from the SBA. Next slide, please. So the last thing before I transition over or back to Desiree is that all applicants under the RRF must have an attestation, tough word for me, that all applicants must certify that current economic uncertainty makes the funding request necessary to support ongoing or anticipated operations. That is part of what you are attesting to when you sign your application. All right, so let's transition it back to Desiree, and then I'll talk to you a little bit later. Thank you.
Thanks, Janie. Okay, so moving on, let's see how well I do at all of the things at once, right? Okay, so what can you use the grant funds for? Grant funds can be used for 3 different categories. They can be used for business expenses, they can be used for construction expenses, and they can be used for business debt. So a little bit more in depth, those business expenses are going to be exactly what it sounds like: your payroll, your utilities, maintenance expenses, all of your supplies, including PPE and cleaning materials, your food and beverage, including raw material costs, your covered supplier costs, and business operating expenses, including insurance, marketing, fees, licensing, your point of sale equipment, rent, those kinds of things. Construction expenses are more limited. You can only use them for the construction of outdoor seating. So you cannot use RRF funds for expanding your indoor dining or expanding your location or constructing a new location or anything like that. You can use them for business debt. So we're talking about your payments on any of your business mortgage obligations, both your principal and interest, and business debt service. So your principal and interest. But for both of these, it does not include any prepayment of the principal or interest. However, if you are behind in some of those payments, so say you're behind on your business mortgage or your business loans, as long as those funds were in existence or were incurred in the covered period between February 15th, 2020 and March 11th, 2023. So if you're behind on mortgage or rent, you can use the RRF to get caught up on those as long as it was incurred February 15th, 2020 and forward. So when you're using funds, they have to be used on eligible expenses that were or will basically have been incurred either between February 15th, 2020 and March 11th, 2023. So the end of the covered period for the grant, like Janie said earlier, you have to spend all of the RRF funds by March 11th, 2023. There are some exceptions to that. If you permanently close your business after receiving a grant and it's before March 11th, 2023, whenever you close your business, that is the last day of your covered period. And if you have any funds left over, you need to send them back to SBA. Same thing if you get to the end, you get to March 11th, 2023, and you have not spent all your funds, you have funds remaining, you'll have to send those back to SBA as well. If you sell your business, same kind of thing. You either need to use all the funds before you sell it or return whatever you haven't used prior to the sale of the business. Okay. It's really important that businesses who do get funded with the RRF grant set up some sort of a tracking system so that they can track how they're using, exactly how they're using their funds on what categories of expenses. And the reason for that is because throughout the life of the grant, the awardee or the business owner will be responsible for submitting to SBA basically a self-certified detailed expenditure report that will start December of 2021, so at the end of this year, and then every year thereafter that they spend grant funds, they're going to have to tell SBA exactly how they use those funds. And so we don't know what that looks like yet. We don't know what categories or documentation anyone's going to need, but we're strongly suggesting that businesses have a way to track how they're using those funds set up in advance of getting them, so that once they do receive them, they don't have to scramble for the certification regardless of what form it comes in. Okay. Now the fun part, how do you calculate the loan potential fund amount, excuse me, not loan, the grant amount? There's 3 different ways to calculate, actually 4, we'll cover the 4th one last, and they go from the easiest way to calculate to the most difficult way, and the fastest processing to kind of the slowest. So the easiest and fastest way to calculate a potential fund amount would be the first calculation, which is typically for someone who's been in existence prior to January 1st, 2019. So it's someone who's been around for a while, and it's basically very simple formula to figure out the fund amount. You take your 2019 gross receipts, you subtract off your 2020 gross receipts, and then you subtract off any PPP loans you've had. So first draw, second draw, it doesn't matter. Any PPP loans you got. Whatever is left over is the potential fund amount that the business would be eligible for. And we'll cover the gross receipt stuff in a minute, but very simple. Basically, what the program is looking for is it's looking at what are your pandemic related losses for your business. So they're taking your pre-pandemic gross receipts minus your pandemic gross receipts minus any government assistance you've received, so your PPP loan, and then that's the difference. So trying to figure out just how the pandemic's affected your business and trying to help cover some of those pandemic related losses. Okay, so calculation number 2 gets a little bit trickier, but it's still not too bad. It's typically for someone who began their operations sometime through 2019, and then so they don't have a full year of 2019 to necessarily say, here's my gross receipts. So someone who is open partially through 2019 for part of the year can calculate using this method or the next method. But just know that the third method that we're going to cover is going to be the longest processing time to get the application looked at. So for calculation number 2, again, someone who opened their business sometime in 2019, you would take your average 2019 monthly gross receipts. So how you do that, if you were open, say, for 6 months out of 2019, you would add up all 6 months of gross receipts, divide by 6 to get your average monthly amount for 2019, multiply that by 12, so you're going to annualize it, and then subtract off the 2020 gross receipts and subtract off any PPP loan amounts. And that would give you your potential fund amount. And then last but not least, the one of the harder calculations, if you will, is calculation number 3. And that's typically for applicants that began their operations between January 1st, 2020 and March 10th of 2021, and applicants that have not yet opened, but have incurred eligible expenses as of March 11th, 2021. So to calculate this amount, you would be looking at the total amount you've spent on eligible expenses between February 15th, 2020 and March 11th, 2021. And then you would subtract off any gross receipts that you have for 2020 and 2021 and subtract off any PPP loan amounts if you got any. Okay. And the last thing to note is that you can also take these calculations and combine them into what we're kind of counting as a calculation for. So for instance, let's say you had an established restaurant for a really long time, and then in 2019 or 2020 even, you opened a second location under the same EIN. The way that you would calculate that amount then is for your first, you would separate your location. So your first location that's been existing for a while, you would calculate using calculation 1. It's very straightforward. Your 2019 gross receipts minus 2020 minus your PPP loan. You would get that potential fund amount and kind of set it aside. And then you would look at your new location and you would decide whether or not you want to use calculation number 2 or calculation number 3, depending on the situation for that second location. You would use the calculation method, come up with a potential fund amount, and then you would add that to the other potential fund amount to get a total potential fund amount that you'd be eligible for. So you can kind of mix and match these calculations as it's needed for your specific situation. So one side note, when we talk about gross receipts, we're looking at typically on your tax return, if you're self-employed, you got a 1040 Schedule C, you're looking at line 3. For our partnerships that file 1065s, it's line 1C. For our S Corps and C Corps that file 1120s or 1120Ss, you're looking at line 1C. And then LLCs would use whatever tax, however they're taxed, basically. So on this slide, when it's saying what can I exclude from 2020 gross receipts, we're just saying, just double check, okay? Your gross receipt line on your tax return should not include any of the stuff listed on the screen. But if it does, be sure to take it out before you do your calculation. So if your tax return, your gross receipt line on your tax return for 2020 includes your PPP loans, your Section 111.12 payments, your EIDL loan or targeted advance or any state or local business grants or Randolph-Shepard Act financial relief and restoration payments, make sure that those items are taken out of your gross receipts before you do your calculation. So you'd remove those items. So again, 2019 minus your 2020 and then minus your PPP. Okay, it's just trying to make sure that we're calculating only your pandemic related gross receipts when we're talking about your 2020 gross receipts in that calculation. So with that, let's see. So there's a couple ways to apply. The application is open right now. It opened on May 3rd, and we are currently in a priority period, which is Janie will talk about later. But just know that if you have not yet applied, we encourage you to do that very, very quickly. So you can do that either through, working at home with cats. You can apply directly through our website at restaurants.sba.gov, or you can apply through one of our full service vendors, point of sale vendors. So if you use Toaster Square as your point of sale vendor, you can apply directly with them. Or you can apply through our telephone at 844-279-8898. So, and that way you can apply over the phone, but know that it is going to take quite a bit longer, but they do have support in multiple languages. So if you don't have access to the internet, you can apply over the phone, but it is going to take quite a bit longer to process the application. And again, it's one of the three, either on the SBA site or through the point of sale vendor or on the telephone. You pick one of the three and just stick with that. So what documents are you going to need? All applicants are going to need to supply the SBA Form 3172, which is the application for the grant, and it will be embedded in the application process. So you don't need to upload it or anything like that. But you'll sign it electronically and initial it and date it and all of that inside the application. Just know that you're going to have to do that. There is a sample application on our website that you can download and use as a guide to help you apply. You're also going to need to submit a 4506T. That's an IRS form for a verification for tax information. And again, that will get digitally signed as you go through the application. And then you're also going to need to have something that supports your gross receipt documentation. So you're going to need something that demonstrates what you're telling us your gross receipts are, and if applicable, your eligible expenses. So we're looking for your business tax returns. So either your IRS 1120, 1120S, your Schedule C or Schedule F, your 1065, including your K1s. You're also going to need 3 months of bank statements. So 3 months just preceding the application. So either January, February, March of this year, or February, March, and April if you can get them. And you could potentially need internally or externally prepared financial statements, such as your income statement or profit and loss statement, and or your point of sale report, including an IRS form 1099K. So those could be the documents that you need to supply when you apply, but it kind of depends on what calculation method you're using. So calculation method number 1 or 2, again, everyone has to do the application, the IRS form 4506T, and then your 2019 gross receipt documentation is going to be your copy of your filed tax return. If you operated in 2019 and you were required to file taxes and you did not do so, you will not be eligible for RRF. So we need a copy of that filed tax return from 2019 to substantiate your gross receipts. Again, you'll also need the 3 months of bank statements and then something that substantiates your 2020 gross receipts. So you only need one said documentation. We'd prefer a copy of your tax return that you filed for 2020. If you don't have that, then you could give us a point of sale report. If you don't have either one of those, then you could give us externally or internally prepared financial statements, such as your income statement or profit and loss statement, where you're signing and dating and certifying as to the accuracy, but that is going to still slow down and delay the processing of your application. So again, we'd like to see the federal tax return, or if you have prepared it but have not yet filed it, we'll take that also, or a point of sale report or your financial statements. For calculation number 3, I know this text is really small, but again, the application, the 4506T, the 3 months of bank statements, and then documentation supporting your gross receipts for 2020 and 2021. So again, we prefer that 2020 tax return that's been filed or prepared, and then or your 2020 point of sale report or a 2021 point of sale report. And then for each of the eligible expenses that you're claiming in your calculation for your fund amount, you'll need to provide documentation for those. At least one piece of supporting documentation as appropriate for the eligible expense type. So again, we're looking preferably for a CPA comfort letter. If you can't get that, we'll go on to we'll tell you, then that's when you could use your externally or internally prepared financial statements. And then if you've got eligible expenses in payroll, we would need copies of your 941s. Outdoor seating expenditures, then we would need to see those invoices and payments for those. And any business debts that you're using when you calculate your eligible expenses with, we would need copies of those lender loan statements as well. And last but not least, though, anyone who is, if there was a star next to your entity type on that screen that Janie went over earlier. So for our applicants that are brew pubs, tasting rooms, tap rooms, breweries, wineries, distilleries, bakeries, inns, or bowling alleys, then you also need to provide documentation that supports your eligibility for the program. So documents that show that at least 33% of your 2019 gross receipts was for sales to the public. So on-site sales to the public was at least 33% of your 2019 gross receipts. And you can give us documents like your tax and trade bureau forms, any state and local forms you filed, or any internally created reports you have from inventory management, sales reports, or accounting software. Okay. And with that, I'm going to turn it back over to Janie to take us into the final stretch here.
I'm coming. Thank you, Desiree. Great job as always. Okay, so how do you get help applying? Well, we often have questions as we're going through a process. And the one really great thing is we do have the call center hotline number, 844-279-8898. It's open from 8 a.m. to 8 p.m. Monday through Friday, and it's Eastern time. Okay, so just be aware of that. And there is help available in multiple languages, and I've heard up to 30 at this point. So that's outstanding. And then if you do have questions, you can always call us at the district office in Seattle. Our number is 206-553-7310. And the other thing I do want to point out is if you go to the sba.gov/RRF website, there is a knowledge base icon, and that's where the frequently asked questions are recorded, and it's very interactive. So all the calls that are going into the 844 number are now being uploaded into this knowledge base system so that questions can be entered in the search icon, and you can potentially have your question answered that way before you call the 844 number. So you have a lot of resources there. Next slide, please. Well, what are some best practices? I guess the biggest thing we want to just share with you is having a complete application. Certainly, we want to make sure that you have all of your documentation together. And what really is encouraged, if you have those documents that you're going to have to upload, get them in a PDF format before you actually start your application so that you have them ready to go as attachments. And keep in mind that the actual application process, if you've got your documents together in the PDF form, should only take you about 20 to 25 minutes to get through there. We want to emphasize that incomplete applications will be rejected, and you will be notified via email or in the message box on the portal as to any problems with your application. So we just want to emphasize delays could jeopardize you from being a recipient of an award. And please rely on your technical assistance providers, your accounting resources, whether it's a CPA, accountant, or bookkeeper, to help you put together quality internally prepared or externally prepared income statements, profit and loss documents. Make sure that you get your situation with that comfort letter, and the comfort letter basically contains information that your accountant or CPA or bookkeeper is saying that they've worked with you, you regularly file your returns, your documentation is of good quality, especially on those company prepared or internally prepared profit and loss documents. comfort letters are really critical. And again, if you do find after you do a review that you have an error in your application, what you'll need to do is contact at the 844-279-8898 hotline number, and they will reset your application. But realize that if you do have to have that done, you're going to go to the back of the line. So we really want to make sure that you have your application in a quality format. Okay. And there is a sample application document on the sba.gov/RRF website. If you get that ready to go, then you're going to be time ahead when you're actually filling this thing out online. Next slide, please. All right, so just so you know, there was a pilot period prior to May 3rd when the program officially opened at 9 a.m. our Pacific time. And we're right in the middle of the first priority period that runs from 1 to 21 days. So it started on May 3rd and it will run for a 21-day period of time. And that priority period allows for the SBA to process applications that are identified and self-certified as being owned by women or veteran or socially and economically disadvantaged applicants. And those three categories of applicants will be processed first during the 21-day priority period. That doesn't mean you can't apply. If you're not in one of those categories, please apply, get your application in, and they will be processed on day 22 of the program until the funds are fully exhausted. Next slide, please. So what are the priority groups and how are they defined? What they really are, again, are women-owned businesses, veteran-owned businesses, and then socially and economically disadvantaged businesses. And I'll define those in the next slide. But what I want you to really focus on is that if a small business concern is owned at least 51% and the management and daily business operations of the applicant are controlled by one or more of these three categories, then you are able to self-certify on the application that you meet the 51% ownership issue. Okay, so again, it's a combination of these three categories need to be at least 51% of the ownership. And the example provided here at the bottom is if you have 5 owners and each one of them owns 20%, then and 2 of them are veterans and 1 is a woman, that equates to 60% ownership in the priority categories, and that meets the 51% minimum ownership requirement to be in the priority group. Next slide, please. Let's talk about what's considered to be a socially disadvantaged individual. They are individuals who have been subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. So individuals who are automatically or presumed to be in the socially disadvantaged groups are Black Americans, Hispanic Americans, Native Americans, including Alaska Natives and Native Hawaiians, Asian Pacific Americans, or subcontinent Asian Americans. Economically disadvantaged individuals are those socially disadvantaged individuals in those groups I just mentioned, whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the same business area who are not socially disadvantaged. In addition to these categories that are listed here, if an individual owner is disabled or a member of the LGBTQ community, they are as considered socially disadvantaged as well. However, those two groups do need to evidence that they are economically disadvantaged individuals. And that is measured based on a 3-year average annual income of not more than $350,000 and per year. And then you're based on your net worth of not more than $750,000. And then your fair market value of your assets is not more than $6 million. So again, those two groups do need to evidence that as part of their documentation. Next slide, please. One thing that they're going to check is if the entity is reorganized for the purposes of qualification for the priority period, that first 21 days, if they're reorganized specifically for the purpose of qualification, it will result in an automatic disqualification of the award. And the SBA will be checking public records and Secretary of State, Department of Revenue, those kind of sources for that information. Next slide, please. Now, we've been talking about the funding set-asides and the importance of them. Here is really where it's critical. There was $9.5 billion set aside for the smallest operators. And in the first category, there was $5 billion set aside for applicants with 2019 gross receipts of not more than $500,000. And then an additional $4 billion was set aside for applicants with 2019 gross receipts that ranged from $500,001 to $1,500,000. And the last bucket were set aside that it has still availability is the additional 500 million set aside for applicants with 2019 gross receipts of not more than $50,000. Okay. Now, again, what I want to emphasize here is it doesn't matter what your revenue size was in 2019, but you're all eligible to apply. But there were specific set-asides for businesses that were in these 3 categories of gross revenue for 2019. The SBA does reserve the right to reallocate these funds at the discretion of the administrator if there are insufficient applications in these groups. Next slide, please. We're done and we're open for Q&A. And we're going to answer questions that were in the chat so that they are part of the recording.
Hold
so
on, just
go ahead.
Just 1 second, if you will. I'd love to give Michael a chance to share a little bit and then open the questions to everybody, if that's okay.
Perfect.
Awesome.
Yeah,
So
happy
Michael,
to. Go ahead, Lisa.
Yeah. So first of all, I want to say thank you to Janie and Desiree. That was a lot. I mean, that was a lot of information. And honestly, I've heard this presentation several times and I've learned something every single time. So thank you for that. I also want to just say that this webinar will be published on our website so folks can go and watch and re-watch this. We will also have a link or a list of the links that were mentioned here today so that if folks wanted to go back to Small Biz Help Law, they wanted to go and to a particular website that was mentioned here, we'll have the list available. I also just want to say that if you are here in the viewing audience, if you're a nonprofit working with businesses and you don't have an immediate place where you can send businesses to get their financial house in order or to build those documents that they need in order to apply, I encourage you to go to WSMA's website, because you'll see there are links to organizations like Business Impact Northwest, Ventures, SNAP in Spokane, Sharks at the Beach. There's all kinds of organizations that can help you through this process. So go to the website and learn about what resources are near you. But Michael, I was hoping that you would share a little bit about, like, how do you best reach out to these very marginalized, very small businesses that may not even know about these resources, but would be eligible?
Sure. So one of the things that Business Impact Northwest has done, obviously, is partnered with Restart Up 425 over on the east side. And what that's allowed us to do is work with them on a multitude of projects, the PPP, the EIDL, you name it, a number of the programs that are available to small businesses. But when it comes to the smallest of the businesses, the best thing is to get the information out as fast and as simplistic as possible. The more data you give them, obviously, that can overwhelm a small business, especially somebody that might be sitting in that under $250,000 gross revenue mark. And just a little background, I work with bars and restaurants throughout Seattle, and I teach CPAs the restaurant accounting business. And what this means is that I look at what restaurants are doing at that size. And at that size, it's a hustle. It's a hustle. You are working that cart, you're on the corner with the food truck, you're trying to get yourself a spot on the street. You're doing all of these things yourself. You're a two-man band. Husband's coming off work or wife's coming off work, and they're coming in and helping out at the end of the day, cleaning, preparing, getting things ready for the next day. So really getting in front of them with simplistic messaging saying, hey, listen, this is about you. 2019, 2020, if you're doing under, as the other panelists have said, under 50,000, you need to be on this. You need to be on this right away, because there's some open money still available. But I would also suggest get in line. Don't be not in line in this case. Although the applications may be overwhelming for the funds, I would suggest that you want to still be in line. So just getting the message out to the small businesses saying, hey, listen, this is about you. Let us help you. Call us, we'll walk you through the process. It's actually a pretty good program. SBA did a real good job on the website. I thought that they did a fantastic job of making it simplistic for the smaller businesses, and it's fairly easy. We get in there, we get some documents ready, we put their 2019 tax return on there, the Schedule C or in some cases 1120, and then you turn around and you add the POS information and everything that they're looking for, and it's pretty slick. It's actually pretty easy to do. So just got to get in front of them, let them know what's up.
Excellent. Thank you, Michael. And I know that you're going to be here when we share the questions. So feel free to answer. And Janie and Desiree, you can open up your videos if you want. And I'm just going to go through the questions. You don't all have to answer all of them, but if you have an easy way to answer, all the better. Okay. So one of the first questions was, do the food-based businesses have to be selling to the public? You mentioned this in your presentation, or at their own storefront, meaning do they have to have a storefront in order to be able to apply?
Well, I'll take that one because I think it's specifically related to people that do catering. And so your end customer is their location is, what we're looking at really. So they don't necessarily have to be on-site sales, but you can look at where your customers are for that determination. So caterers definitely are eligible. And I think that really speaks to that one. Okay.
So, and even if the question is like, if the caterer is going to just private homes and doing these events or private bridal weddings, those are all eligible.
Yes.
Okay, great.
Right. The caterers are automatically considered eligible based on the nature of their business. They don't have to prove the 33% on-site sales to the public. It's already assumed that their sales meet that threshold.
Mm-hmm. Excellent. So another question. If you have two this is a question from MDO has received. If the business owner has two restaurants in operation, one closed and the remaining operation, is it still eligible to apply?
Yes.
Okay.
The remaining active operation is eligible to apply.
Perfect. Okay. Now, what if the food cart vendor or the food stand doesn't really have their financials together? They're kind of keeping it together in a shoebox. They haven't really recorded all of their receipts yet. Like, what advice, this could be for Michael, for any of you, what advice would you give them right now?
I would tell them they need to put their financials together and at least do a company prepared for 2020. They have to, as Desiree indicated, they have to have had a 2019 tax return. That is a mandatory requirement because that is the basis for their award amount. So again, I'm hoping that you have filed your 2019 return. But if you're looking at 2020 information, please, company prepared, internally prepared documentation for that profit and loss document is allowed. You just need to sign and date the document certifying that the information is true and correct.
Okay, and anything else you want to add, Michael?
You know, I actually kind of want to ask Janie a question here, because one of the things that we saw in the application was there was certified POS information, which we know are those POS providers like a Toast, and I think Clover was one of them. But then obviously there was a distinction between doing an application through Toast versus doing an application with a certified POS. If they didn't have a certified POS, I believe the application allowed them to enter the information as a non-certified POS report showing their annual revenue. Is that a correct statement?
Yeah, and again, it's going to be documented. Okay, so Desiree, correct me if I'm wrong, but Square and Toast are the two that they can apply through. And then we have Aloha and Clover.
Clover.
Are the other two POS providers.
They're called, support providers. Basically, they're giving SBA the reports in a way that meet the SBA requirements.
However, that reporting generally is only the revenue stream. Okay, so again, an internally prepared profit and loss document is a different document than just the POS report. All right. Sure. And that's why I'm emphasizing the fact that, you know, they need to have something that shows that profit and loss information. An income statement really is prepared by a CPA or an accountant. A P&L is generally an internally prepared document or one prepared by a bookkeeper. So that's the quote unquote official, you know, how you would officially describe those, which again is separate from the POS reporting that is allowed from those four providers. Okay.
Yeah. So sometimes, I was just gonna say, because sometimes POS reports don't encompass all of a company's gross receipts.
That can absolutely be true.
And so that would be the disadvantage of just submitting a point of sale report, POS sale report, and saying, here's my gross receipts, because you may be shorting yourself in your fund amount by quite a lot if that point of sale system didn't encompass every single dollar of gross receipts you had.
Just a few examples. As you know, I've worked with a number of the direct restaurants, and of course, you know, from the question, I'll bring the statement. People haven't done their 2020s. They don't have a complete income statement necessarily, predominantly wrapped around the fact that PPP wasn't, how is it supposed to be entered? Is it actually considered another income on the profit and loss statement? So there's a lot of factors involved. So a lot of accountants, and especially in the restaurant side of the house, really haven't done much with them. And they're just filing extensions. Certain states, state of Texas being one of those, that they don't even have to provide an actual tax return until June 15th, where May 15th is coming right around the corner for the majority of us, Washington State in particular. The point is that you're going to find that a lot of these applicants haven't done any type of P&L and don't have the comfort letter. And so those are going to be the holes, the holes that we saw when we were doing these applicants. So you really got to get in front of the client saying, hey, here's what's happening. This is what you need. Make sure you get your accountant involved here. Make sure you have that P&L. And then we've actually suggested that they also show the data, because in a lot of restaurants, the POS system is the end all. And if they're running more than one POS system, any professional would suggest they go to just one. Just go to one. No reason to have two. And if you have two, there might be some funny business going on there. So just FYI, we just try to get them to take a look at that one POS system, just as an added documentation, since the application allows for it. So
Perfect.
And one thing I do want to say, and I'm not sure, Desiree, if we went over this or not, but the processing time on average for these applications, they were targeting for 14 days, but we've had quite a few that have been processed where funding has occurred in less than a 10-day period of time. So if you're using some of those internally prepared or the POS systems reports, just know that the processing time is probably going to be a little bit longer than that average 14 days that's anticipated. Okay.
That was really helpful, all of you. I wanted to tell one more question that came up, and that is from one of our partners. They have a food truck, a business that they're helping, that had to, during the pandemic, had to close, but they have been still doing takeout in a different venue. They're just curious if that business is still eligible.
Mm-hmm. Sounds like it to me.
Okay.
One of the things that from a state level perspective, I try to help, because we have clients that do a little bit of wholesale that will also do a little bit of retail. And that's actually it's distinguished on the state tax return. So if there was ever a question, if that 33%, if they're in the case of wineries and tasting rooms, things like this, if there was ever that question, I said, go back to your tax return and your state income tax return and take a look at what you're doing. Are you paying a wholesale B&O styles tax, or are you paying a retail? And then get a percentage from there. That sometimes helps.
That was helpful. Okay, here's another question. Just a question about how much of the reserve funds are left for the very smallest businesses. I know you mentioned it, but I just want to make sure we nail down that amount.
So the set aside, remind me, Jeannie, was what, 500 million?
500 million, and that's the only category left.
Yeah, so they're, as of May 12th, so that was what, yesterday?
Yeah.
There was $330 million requested in funding.
So that is for the businesses with gross receipts under 50,000.
Correct.
And that'll be open as long as it's open.
Mm-hmm.
Great. Oh gosh, that's very helpful.
As long as it's available. So, from May 3rd to the 12th, however many days, what is that, 9 days? I'm horrible at math. Don't quote me on that.
So like, are you talking about the 21-day period?
Well, so the portal, SBA started taking applications on May 3rd. So between May 3rd and May 12th, they got over 13,000 applications that totaled $330 million in funds from businesses that were under $50,000 in pre-pandemic revenues. So in that 9 days, we went through 330 million of the 500 million. Great. So, there's still some left, but it definitely is going quickly. And we do recommend that people apply as quick as they can. And we can't officially tell people outside that category to apply. Obviously, we know that there's more demand and there are funds available, but we're encouraging everyone who's eligible for RRF to get their application in before the portal closes. We do understand it is SBA's stance that they're going to go back to Congress and ask for additional funding since the demand is outweighing the money that was appropriated, but we don't know what's going to happen. So we are just encouraging everybody to apply as soon as they can.
Perfect. Do you folks have any questions or final comments before we end? Awesome. Well, I want to say thank you to all of you. You are fantastic as usual. And I want to say for those who are listening, if you are working with businesses that don't have their financial house in order, send them to our website where our partners have training programs. They have technical assistance providers. You can go to Small Business Help WA, which is another excellent resource for training and technical assistance providers, as well as lenders. And we just really encourage you to access the small business development centers. They're powerful resource partners who provide free business services and help folks through this process. And of course, the SBA is awesome. So thank you, Business Impact Northwest. Thank you, Small Business Administration leaders. And we look forward to talking with you in the future.